thank you, Mark, and the whole 361 team for organizing. Welcome to Seattle. Great to have you guys here. Great to hear Bainbridge Island here, such a marquee. It's my hometown where I was born and raised, so we figured out how to work that into more of my shtick as well. And so we do some more events over there. It's a new spot down at the south end of Point White region. So, are you Point White? Yeah, he's in the country club. We couldn't go to that area of the island ever, so I'm interested in the secrets that they got hidden behind the gate there. So I got some questions for. So anyway, great to always get together, get a chance to learn and be together and talk about the opportunities in the market and a chance to work with other family offices and technology entrepreneurs and successful folks to share their experiences. I've had the chance to do that for 23 years now with Currency Forum, Currency Capital, and building our investment community. So excited to work with Mark and his team and see where we can find opportunities to do some more deals together. Thank you for being here.
Philip Benjamin, run my family office, and see a lot of familiar faces here in the audience. Nice to connect with everybody. Also, think it's really cool that that's who's showing up here and kind of cross-pollinating the 361. So I think that's encouraging. We have a real estate background. I've also been investing in venture capital. I kind of brought my family into the space 10, 15 years ago, and it's really iterated our approach to investing. I did a lot of direct investing, a lot of investing in funds, and I got to the point where we kind of really have developed our own strategy where instead of investing directly into businesses, we work with late stage venture capital companies and provide liquidity to senior leadership. So kind of founders and optionees and C-suite, and also help provide liquidity to early investors who've been kind of locked up for 10 plus years. And we do that in a way that's different than a secondary sale. And, instead of buying their shares from them and creating taxes and making them give away their upside, we effectively lend against the value of their shares. And so we create a lot of downside protection for us and our investors. We now have investors that do this alongside my family. And we give them non-dilutive capital, and then we kind of share in the upside together down the road. And there's a lot of mechanics and how that works. I won't go into it right now on this panel, but it's kind of the way that we found that we enjoy investing in venture capital space and very different than a lot of the earlier stage stuff that everyone else seems to be focused on these days.
Hi, my name is Walter Benedoff. We have a small venture firm. It's a cross-border venture firm. It's between the U.S. and Latin America, more specifically Brazil, but pretty much all of Latin America. I really enjoyed the panel, this last panel, and had a lot of questions. And we talk about the sexiness of AI or technology. And I've been in a tech firm. I've worked in an AI firm for 40 years. I was COO of a data structuring. But our latest investment was in a sawmill in Uruguay. So, a little bit off, right? But we are very much invested in technology, mostly prop tech, property technology, and ag tech. And we bring some of this technology that's developed in Latin America and Brazil in particular to the US and vice versa. We take two ongoing companies that are here in the US that want to take advantage of the Latin American market, particularly ag tech.
So we heard earlier today, you heard of laser leading. Oh, it's exciting, the video that you showed. Yeah. Well, let's start. So, let's go scary. Now we've done the intro. What's scaring you and exciting you? You can make it the same answer, or we'll start with you, Walter.
Sure. What scares me right now is all of Latin America. It's just crazy what's going on down there. It's sad. I've been in Latin America since the 70s. First moved down there in 1974. And, I see that Lula's comment, Lula's the president of Brazil, his comment last week about siding with China, about criticizing the war in Ukraine, about strengthening the Chinese currency versus the dollar. I mean, that's just wrong. And this week's comment from Ecuadorian president saying, well, you know what, we might just have to get rid of Congress like Fujimori did in Peru years ago. So, it's where I'm invested. It's what I believe in. I really do think you can extract value from crises like this, but cool. I think we're long on Latin America right now. It's not going to be easy to extract value from there. So one of the things that we do see is the opportunity of, I will tell you, there are pockets inside Latin America, all over Brazil, Argentina, Paraguay, a country that I thought was not doing much. There are tech pockets in there of folks that are really doing some interesting stuff. So we're seeing the opportunity of bringing some of that tech to the US. We just did that last year with a Brazilian company that's very involved in property technology. It's in the whole hybrid environment space. So hybrid is hard. And this company has actually figured it out. And it's low tech. It's not that complex. There's not a whole lot of AI and ML built into it. Low touch, really easy. And that's the kind of stuff that's coming out of Latin America. I'm pretty excited about that.
So I'm still kind of forming this thought, but I think that something that kind of scares me, and I'd be curious to hear what other people think on this as well, is this idea of kind of, we have the rate of change in humanity and technology is kind of exponential. And I wonder whether that's going to create more and more volatility in markets. And if we're going to see higher highs and lower lows in quicker succession. I think, my family's background is in real estate, and we've seen, supply and demand go out of whack, and there's usually like this 10 to 15 year cycle that's happened for decades and decades and decades, right? And I think in all these other spaces that we're in, mostly venture capital that we're talking about too, we've only seen a couple of cycles. It just hasn't been around long enough to really understand that. And I think when we look at the rate of technological change and the rate of geopolitical instability, just everything is faster now. And does that mean that we're going to have more and more volatility, quicker and quicker succession and frequency? And when we think about that as an investor, that's incredibly scary. How do you ever place a bet if you don't know? Well, and yeah, I'm going to get to what's exciting about that. But yeah, I think that's scary. What's exciting is everyone still wants to invest and is excited about investing, will find ways to invest, and people who can come up with solutions to address these fears about volatility, valuation risk, and how do you get comfortable investing with a fund manager or in a given industry are going to be able to attract capital. And I think that a lot of people in this community have found various ways to try to do that. And so that's really what we're personally really excited about. I mean, for us, it's all about how do we protect our downside? How do we make it so that we're in so cheaply that even if it drops 50%, we're not, right? So that's kind of how we've gotten comfortable with playing really risky spaces. And I think everyone else has their own solutions. And so I found it very inspiring to hear about how people are innovating and coming up with solutions for that.
I was just gonna say, I'm gonna play Kate for a second and like him, Philip, his fund is actually really interesting in that it is sort of capital preserving, and I wish you could talk a little bit more about that. But I think maybe all of us on here, but certainly me and him, our funds have a capital preserving sort of bent on it, and I'd love for you to talk more to the audience because it's very innovative.
Yeah, sure. I'll do that briefly, in a hopefully not super pitchy way. I'm trying to look at Mark, but he's not looking. Hey, just go ahead a couple of emails. I gotta follow up. Yeah, no, I mean, actually, I think that what we're trying to do actually has a lot of positive benefit and kind of psychological benefit for leaders. And I think that's really important to keep people in the space. So generally speaking, you can invest directly into a company, right? You can do that at these various stages. You can also get exposure through something called a secondary sale, and that would be a private purchase, before a company IPOs of shares from one investor to another. The problem with all of those transactions, particularly secondary sales, is that they're a zero-sum transaction, right? Like I buy your shares, I take your upside, you pay taxes, and you don't have any upside anymore, right? And that type of transactions is so many transactions in business, this zero-sum mentality. And what we really love about the model we've created is it's a non-zero-sum dynamic. So what we do is, instead of trying to buy somebody's shares, in a late stage company at a massive discount, what we say is, hey, listen, we want you to keep your shares. We want you to keep your shares in your name. It's like if you owned a house, you could sell your house to get liquidity, or you could get a cash out refi in your house. Well, we want to create the cash out refi option for founders in particular, but also C-suite executives who want to exercise their options and pay their taxes and be able to become shareholders, or an early investor who doesn't want to sell their shares but needs liquidity, right? And so what we do is we use something called an open forward purchase agreement, which is a really eloquent way of solving this, where you say, hey, we'll give you $1 million today. You put up $4 million worth of your shares as collateral. As investors, we get 75% downside protection on our investment all of a sudden, and then we get to share in the upside. Well, what does that founder get? They get to keep all their shares in their name. They get to continue to vote with them, and they get the liquidity that they need today. They kept it in the name. They're not cashing out, and so they're signaling something to their board, to their shareholder base, that they believe in the future of their business, but they also acknowledge that they're human, right? And they've been working for 7 or 10 years, and they might need liquidity. I think historically this has been solved by secondary transactions, but that was kind of just like something that everyone took the pill and swallowed. And so I think it's just another example of how do we help the people that are actually running these businesses and the investors that are backing them, and people who've worked a long time and who have golden handcuffs with options. How do we help all of these people stay in the game, and at the same time meet their very basic personal needs, right? By getting a little bit of liquidity before that public to private transition or private to public transitions occur. So anyways, that's as much as I want to go into the model today, but I'm happy to talk to anyone on the side about that.
It's a great model, and we need more liquidity for our entrepreneurs. It's a big challenge out there for early stage investors, having fought the fight here for 20 plus years and have a lot of unrealized potential out there. Vehicles like what Phil's doing are very key, and a great way for family office capital to come alongside early stage innovation capital and be able to provide some very significant support. So I can't, I'm just very excited to support that initiative and see what we can do to create more liquidity, more ways for family offices to participate in investment, get good returns. And so the thing that scares me the most is when nobody shows up. And that's really driven me my whole career. So thank you for showing up today and being a part of this community. And that's really our biggest strength, is working together to mitigate the risks, the challenges, the fears that we have. What works against that is diversification in our community. And that's really our biggest asset. And so excited to get a chance to learn and be a part of that here today, because together, there's nothing that we can't do and accomplish. But when we're divided and we're siloed, or virtualized, when we're made to be not human, that's when the worst of humanity can come out. So I just encourage everyone to do what you can to support community organizers, events, activities across all of our communities, especially here in Seattle. We have the Seattle discussion here at the table about, what do we need to do to get our downtown community, our heartbeat here, our investment community, our entrepreneur communities, all our different silos working together to really make the Northwest a vibrant place where 360 can come back and visit time and again. So
What do you need to do?
Really, it's a matter of just working together. That's always been our biggest challenge here. We've never lacked the resources, but we have lacked leadership when it comes to the civic conviction to be able to stand up and really deliver the solutions that are necessary with the thrust of willpower behind it. So we're starting to see that emerge now, and it's really a collective effort where, our leaders can lead, but the people have to deliver, what the business community needs, what our social community needs, and we're on the upswing in a big way here. Definitely would not bet against Seattle, and there's a lot of opportunity here with next gen of entrepreneurs. And so what really gets me excited is the trillions and trillions of dollars of capital that's going to transfer here. It also scares me to death as well as to where that 60 plus trillion, where's it going to go? How's it going to be invested? Is it going to be wasted? Is it going to be put towards the values and the entrepreneurial activities that's going to then create the next wave of wealth and prosperity for our region? Or is it going to be squandered? And is it going to be spent on things that otherwise are going to do more harm than good? So that's what keeps me up at night and keeps me motivated to continue to build upon everything that we've had a chance to be involved with.
Locus control on that asset is so good.
Right now, it's Wall Street. Right now, I'd say it's Wall Street, unfortunately, but there's been a lot of change in the financial services industry over the last 10, 20 years, but still there's too much centralization of the capital supply. And unfortunately, 2/3 of the wealth that's owned here in the Seattle area is exported and managed elsewhere. That's beginning to move back, but that was highlighted earlier today in terms of the wealth that's here, the lack of financial services industry here in the Northwest has always hampered our collective growth ability. We don't have an investment bank here that operates at scale. Our financial institutions have been chopped and sold off over the years. So it's a big challenge point for us is capital formation at scale to be able to support the entrepreneurs here in the region and be able to provide that leadership for what's next and to be able to channel that capital. So I do think it's within the families, it's within the family office structures where the solution in my mind comes from. People taking hold of their own wealth and investing it in ways that they direct and see fit and have some operational insight and can hire and build a team around, plus participate in a community of other folks and have that value alignment with their capital. And it's a good question. How do we do that at scale?
Let's pull back from the Seattle thing. Let's go back to what society has. Like, what are the best investments that we switch back? Obviously, other than songs, I'm very boring. But some one or more something you're super excited about.
Well, GPT-3 or GPT-4, whatever it is now, right? I mean, there's just so much going on in there, right? So I was with this AI for 4 years, and I was one of the fortunate ones that got to, we raised a bunch of money and I got to exit. That was great. And turned it over to guys who really knew what they were doing, running the business. But the opportunity there, and so the company basically structured data. It was speech and NLP and some computer vision. And the opportunity there to actually be able to take a business issue, it doesn't have to be major issues, just small issues, be able to tackle an issue from a solution perspective, apply some technology, apply some AI, some ML, and you get some solutions. And you can be able to do that over and over and over again. And now, with everything that's going on with GPT, it's just fantastic. I mean, it's that much faster and that much more agile. So that gets me excited. I think we're on to something. Of course, there's concerns around bad actors, whatnot. But I think if you have the right railguards, right, you have protections. I think that's what really gets me excited.
I talked a little bit about this yesterday, but I'll bring it up again since there's new folks today. I think an example of a company that we invested in as a family office that really gets me excited is a company called Carbon Engineering, because I see it as an intersection of kind of capitalism with climate change, with big oil and the green movement. So the high level of them is Carbon Engineering is a company that has the ability to suck CO2 out of the air and then do 3 things with it. One is to push it back underground and sequester it, and for carbon credits, and many airline companies and companies like Microsoft would value being able to kind of pay them to effectively, get to net, negative or neutral. They can also do something called enhanced oil recovery, which is where they can pump the CO2 into caverns where there's only 10 to 15% of the oil left, and it basically carbonates the remaining oil and causes it to froth up, and you can get every last drop out. But in the meantime, a lot of the CO2 stays underground, and so you've taken what would have otherwise been crude oil and really actually now gets accounted as something much closer to a renewable fuel source. And in the meantime, have effectively sequestered a lot of CO2. And then the final thing they can do is they can take carbon from CO2 and they can take hydrogen from water, and they can create carbon hydrogen chains. And that's a clear fuel that is a universal fuel and can be used for anything from jets and rockets to a diesel truck on the highway, right? And so we have the ability and the technology to solve many of the issues we're facing at climate change level. And what we need to do is we need to align profit with what needs to happen. I think this is a beautiful example of when that's happening. They're on, they're in Squamish, BC on native land. Bill Gates and my family, and many other people that I would say view themselves as environmentalists, were early investors. And then we have Occidental Petroleum that owns almost more than 1/3 of the company at this point, right? And you think this evil oil company is somehow investing with this group. What's what's wrong. And so I'm much more optimistic around this. I think that we're going to be able to align profit and capitalism with what needs to happen with these existential threats. And yeah, I'll pass it off from there.
Yeah, so can I just add that carbon sequestration, please? Seriously.
Yeah, no, that's one way to do it. That's one way to do it.
Capture carbon, that's it.
It's really exciting to hear the update on that company. I think for Impact Forum, I think it was like 2012 or something. I know they've been working on sequestering the carbon for a long time. Really great to hear the progress that they've made there. Definitely the clean tech and impact investment has been a much bigger part of our portfolio. With Credit Suisse, we fund about 175 or so deals a year across our network, 75 million or so invested. So we're diversification thesis, whether it's health IT, whether it's blockchain technology, AI obviously emerging now, and you get into to look at deals in those areas, plus through fund managers and folks that are specialized in the areas that they understand. We hope each angel and family office is able to invest in areas that they know and understand and can add value, and then contribute to support funds, investment advisors that can get access to even more deal flow in other geographies and industry areas. So EarthGrid won our most valued company at last week's expo. So Troy has built a technology using, I believe it's like Star Wars meets drilling machines. So basically for tunneling under and resetting power and utility lines and being able to call EarthGrid. And so he's got a very audacious plan to basically tunnel under the entirety of North America and relay all of our, for instance, all the power in California, all the power lines that are causing all the wildfires, to be able to address those kind of issues. So the company is completely angel backed, family office backed, and just got a huge joint venture term sheet for many billions of dollars to help roll this out. So it's exciting to see successful entrepreneurs who've already built and sold several companies come back and really take on that audacious of a mission. And so it's my pleasure to support Troy and his vision to have that kind of impact and enable investors to be able to participate in a very widespread way, which is unfortunately not typical, and hopefully will become more the norm for these kind of earth-changing opportunities.
What's your most exciting company?
I mean, it's really hard to pick. So we invest in female entrepreneurs, and I don't know if everybody in the room knows about this, but women-led companies are undervalued across the board, 30 to 60%. And we outperform male equivalents by 25 to 50%. So this is essentially a money ball. Yeah, I see what's going on in the back. So it is essentially a money ball play. So it's like every single company that we have in our portfolio is like really exciting. But I would say that for me personally, I was particularly excited about, and because it's a personal thing that I struggle with. So I did a lot of legal documentation or negotiations when I was at large firms, and one of our portfolio companies actually addressing the problematic nature of like managing like legal like relationships by using an AI platform. So it's called Applicat. It's incredible in terms of how they approach this, so that lay people can handle a lot of the things that traditionally required a lot of legal help. And then with that, I can't remember, but I do believe that they have grown several X since our investment, which is a couple 18 months ago. I'm looking at my partners over there. And I believe they've already been approached for acquisition conversations as well. So this is like a really exciting investment for us.
So I guess I'll do two if I'm allowed, and I'll try to tie them together. One, in blockchain domain, we don't do many direct investments. We invest in underlying hedge fund managers, but we do invest in specialists because that's where you feel like there's an edge if you're very focused and specialized as a manager. So we're overweight through that method in NFTs or non-fungible tokens. And the reason we're overweight there is we think that most of the world's assets, certainly physical, like real estate, but also even digital, like our identity and all of the data streams that we create are non-fungible, meaning I can't just give you mine and get yours and it's the same. The way that the only thing that's fungible is currency, really. And so most of the world's assets are non-fungible. We think the ability to tokenize those assets, prove title or ownership of those assets, and then transact around them in a more fluid way is going to be a big deal, whether it's, again, intellectual property and digital, whether it's physical property. I think it's actually Hernando de Soto for President Uruguay who said there are trillions of dollars of untitled assets in Latin America. And we can title most of our things here and borrow against them and prove our ownership of them. A lot of parts of the world, we can't do that. That's a huge baggage around people building wealth in parts of the world that don't have the same institutions that we do. So we're very excited about NFTs. And I think what we apply NFTs to will go way beyond JPEGs, just a lot of it is today, to literally our identity, even tokenizing, creating derivatives about land and what's going on in that land. Speaking of like carbon budgets, like a friend of mine's company, it's the first company in the world to take a picture of every place on the Earth every day from space. And we're talking about how we could grid the Earth from space, measure what's happening in that grid in any given day, tokenize the inputs and outputs on that in a way that you could actually inject incentives to change what is done in terms of land management on those grids. And so that comes from the combination of the ability to do all the things we talked about here today, from NFTs to ubiquitous access to data in near real time, and the ability then to inject incentives in a really fluid, low overhead way to shift outcomes. So where all those threads move together is what I'm excited about.
I got a quick question. Speaking around blockchain, but is there some way we can blockchain democracy? Truth, so that we, at least voting, I mean, that's a start, but I mean, there's gotta be a way, if we talk about trust, and that was the issue in the last time, there's gotta be a way to pull blockchain into this, so we're not just out there.
It doesn't have to be blockchain, right? Everybody's like blockchain and that's the whole security solution. There are a lot of different security solutions, and currently our election systems do have security systems tied to it. And it's just not well known or understood by the average person. I mean,
I generally think there are resiliency problems in centralized systems, and even here in the US, we've realized in the last couple of years. But there are accessibility opportunities in decentralization also in places in the world we don't have good functioning institutions. It's just that now we kind of are the institutions too. I mentioned the word institutional before. Like I think we kind of need to be the institutions at some level when our institutions are less functional. And maybe that's even a good thing. Like we have more autonomy, more agency, more control if we do. But we also have bigger responsibilities. So yeah, whether it's voting or whatever else it may be, I do think decentralized ledgers, like databases we can all share essentially and all look at and all be on an even playing field in terms of access to them and insight about them and ability to write data to them, that can help with things as peers. And I think democracy is one of those. Again, Latin America, like democracy Earth is a widely came out of entrepreneur in Argentina, who's one of the early Bitcoiners down there because of highly inflated currency. But he also has been working on sort of the rails for democracy on blockchains for almost a decade now. And it hasn't obviously changed our elections yet, but I believe one day it will.
I'm from Seattle. 10 years in Missouri, St. Louis, Missouri. So thinking the Silicon Valley Bank situation, I haven't fully wrapped my head around or spent time digging into it too much, but Brian and I invest in a company called Pepper that basically manages risk for investment portfolio managers. I think that holds a solution for what happened with SVB, but what if y'all decided, hey, what could have prevented this? How do we not just secure our investments moving forward, but how do we grow them in light of what happened with SVB?
sorry, but you guys have a lot about this.
So in 2020, one of our partners went to the SVB leadership team and said, you have all this exposure, and she showed them analysis that she's done on their on their deposits, and they literally looked at her and said, oh, this is not. So it's not necessarily that we don't have data or that we don't have analysis or we don't have knowledge. It's actually an attitude problem that caused SVB to have this scenario. So I don't know how to solve that, but I can tell you about the technology. That's it.
Travis, good for you.
Okay, I got you. Sorry, thank you.
I think it'll actually be a net benefit, getting these technology entrepreneurs out to the broad financial services community. All our banks should take care of entrepreneurs and they need to figure out how to do it. I think what was happening at SVB was unfortunate and self-inflicted, but also now it kind of scatters, the ivory tower out amongst the financial industry. So I think that is probably a good thing that we don't have half our startups in one bank. There's enough risk within that pool. And then you look at the investment capital on top of that. It just was a very tough situation. Certainly have a lot of friends and colleagues and folks we know that were impacted. Unfortunately, it was, handled in a way that, business was able to generally carry on as normal. And we'll see what happens in the commercial real estate area next. That's going to be an order of magnitude more challenging if things get difficult there. So financial volatility is going to be there. We've all got to do what we can to have good risk management and good policies. And like was just said, have the right attitude about it. We need to be looking at the worst case scenario, making sure we've got plan A, B, and C in that case, and not just expecting that the music's never going to stop, because eventually it does.
How do you manage information? It's an asset that comes to what so many of us, we have friends who want to, what was 500, 7,500, and back home.
We use Carta as our fund administrator, and then we have a very capable team. We get the updates at our annual meetings coming up in the next 2 weeks. They get to run through all the companies and keep track of them. But it's a relationship, with the human beings, the CEOs, and running those companies and getting those reports and having the attitude that the cap table is an asset, not a liability. So communicating with shareholders is actually a positive thing to do and to keep the shareholders up to date. And we had a difficult situation where VC pulled the term sheet 2 weeks ago, and the company needed money by the 1st of May in order to stay in business. And we called a shareholder meeting. We had 80 investors on the call, and today we closed on $700,000 to keep the company going. We'll probably fund the full $2 million. And that's because the CEO keeps us and the other investors up to date, sees the investors as an asset, and when times get tough, we step up to get the company over the hump, and that way we'll get a chance to realize hopefully a very positive return on our investment. So having diversification creates its own challenges because it's a lot of different relationships to manage across the portfolio, and how do you manage all the information. There isn't any great solution out there, but Carta is the best one we found today for quarterly reports.
Never a lot to
And physically, connecting, getting together, Zoom, in person, and being able to really showcase that support community behind these companies really makes a difference to them. And unfortunately, I've got to jump as well. I've got a quick appointment, but I'll be back as well just after that. So thank you all for the opportunity to be here.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.